Hey everybody, Real Estate Ninja here. I hope you're doing well. We're going to talk about the banks today. To say that there is a lot of information coming out from the banks as far as disclosures they're asking you to sign, people getting their accounts closed down. I'm getting so many emails. It is incredible. I talked to my gold broker the other day, and she has a client that she's worked really closely with for the last year and a half, I want to say. And he has a wild story of having his bank account brought down to where he can only have, I don't want to say the number, but it's like less than $2,000 a day he can have withdrawn. So I'm going to get that information and get it to you. But what we're going to do is we're going to talk about US bank deposits plunging last week. Remember, as the banks implode, the banks aren't making loans. They are illiquid. They are racing to the Federal Reserve for help. And it says right here that the Fed rescue funding usage hits a new record high. What is that going to do to real estate? Well, it's going to cause real estate to continue to be completely stalled out, no sales. And then what we're waiting for is the next part of the cycle, and that's people losing their jobs. Now, people have already been losing their jobs since January. We have lots of homes around the country that are well over into the foreclosure process, over 90 days past due, and banks are trying to stall, push off this information, but it is starting to come out in their quarterly reports. And I believe in the next 2 quarters, you're going to see amazing data that proves my thesis. And you are going to want to be ready for this. All right. So, also everyone that has the real estate crash course, a new video was uploaded, a new lesson was uploaded last night. So go check that out. All right, here we go. This is out of Zero Hedge. US bank deposits plunged last week as Fed rescue funding usage hits new record high. It says here, the outflows were driven by institutional funds. Now, that's very interesting. We have institutional funds withdrawing money out of the bank. Would you agree? Type 1 if you do. The institutional funds, the fund managers are pretty darn smart. They didn't get where they were by being schlubs. And they are seeing something that a lot of the public is not. And so they are pulling their money. It says this, the first in 6 weeks, retail funds saw inflows for the 18th straight week. Also of note is that the usage of the Fed's emergency funds rose yet again, admittedly over 144 million to a new record high. And here's the chart right here showing that. Continued, I mean, it was a massive spike back here, back in March and April, and that was when the banks were completely tanking, right? So you saw the use of that liquidity just spike up, but you see this is still on a trajectory upward. It might not be this, but what you're going to see is this will start spiking again drastically as more banks start to fail, which I believe will be in the end of September. You'll see these announcements. It says, meanwhile, total bank deposits on a seasonally adjusted basis fell for the second week in a row, plunging last week by $49 billion, which leaves the divergence between bank, and this shows you where we're at right here. That's the bank account amounts dropping right there at that little drop. Obviously back here in the springtime, they cratered and you saw them start to pick up a little bit, but now again, we're plunging again. It says here, which leaves the divergence between bank deposits and money market funds wide, but perhaps starting to narrow. And you're seeing that divergence that was expanding and now starting to come back a little bit. The big drop in deposits was driven by foreign bank outflows, but large and small banks also saw notable outflows on a seasonally adjusted basis. However, on a non-seasonally adjusted basis, large and small banks saw deposit inflows. So we have now the ubiquitous battle with, I don't want to say that word, measures showing domestic US banks had 15 billion of inflows, but 18 billion of outflows. Now this is seasonally adjusted. Despite the outflows, large and small banks saw loan volumes increase last week. Now, the question is, why would loan volume start to increase? As the cycle plays itself through and people are stalled, they're trapped in their homes, they can't leave their home, they still want to go places, do things, experience life, or they have found themselves getting less hours, or they know they're about to be unemployed. How many times, or do you know anybody that's done this? I do. In 2007, when people were getting laid off, I actually know people that were going out and getting a new home loan, knowing that they were going to give the home that they're in back to the bank. Or they were pulling an equity line, and I knew people that did this, fully aware, I mean, we're talking over six-figure equity lines, fully aware that they were not going to be able to pay these payments or that they were not going to pay them. They were going to decide not to and let the ship go down, but they were going to write checks for cash and they were going to have that money. I know people that did that. Do you know anyone that has done that before in the past? I believe that as we follow through this cycle, you're going to see people getting desperate. They're going to see the writing on the wall. They're going to run to credit. They're going to run credit cards up. They're going to run equity lines up. They're going to go and they're going to get a different home or something different, and they're going to walk away from those loans. Now, we're actually seeing that in the auto industry, where a lot of people, I talked to a finance manager of one of the largest auto groups in the nation, and he said there are so many people being denied right now for an auto loan because they just started the default process on their current auto. And when they asked them, they said, we're not going to give you a loan, you're in default. And the people will say, oh, I didn't know you'd catch it. We didn't know it would happen so fast. There are so many people, I believe, that are going to move into desperation in that moment. It says here, finally, U.S. equity market cap remains divergent from U.S. banks reserved at the Fed. So what exactly are the banks going to do in 6 months when the Fed's window expires, funding expires? And that's about $107 billion balance sheet hole that will need to be fixed. The fact is, the Fed's balance sheet is sort of ballooning right now because they are having to go and essentially give liquidity to these banks. And so they're taking on things onto their balance sheet as collateral. And I believe the deluge of banks are going to be overwhelming here in the near future. Again, about 6 to 8 weeks. And then the mask is going to come off. Now, speaking of masks, you're already seeing around the world, around this nation, the rhetoric running up, oh, hey, we're going to go back into masks and all this stuff. I believe this to be only because they want to cause you to have fear and not understand what's going on with the market dump. And just like what happened when the world shut down in March or April of 2020, it was easy to just go blame the boogeyman being the flu. And I believe this is being set up on purpose. So I hope you guys are ready for this. I thank you so much for watching. Oh, also, everybody that's coming to Vegas, I know it's going to be a crazy time. I'll put a link down below if you haven't bought your tickets. Really excited to see you guys there. So it's going to be September 30th in Las Vegas at Caesar's Palace. There's going to be some awesome speakers. Joe Brown from Heresy Financial and a bunch of other YouTubers are going to be there. And as a matter of fact, a bunch of people in the silver and gold space and crypto space. I think Charlie Lee's brother, Bobby Lee's going to be there. They're going to be helping people get set up with crypto and just a lot of alternatives to what's going on in the mainstream with finance. You'll be able to learn stuff there. So I'll put a link down below for that and in the comment section. Thank you so much for watching. The Economic Ninja is out. Oh, wait a minute. I'm the real estate ninja. Why do I keep giving my brother all that credit?